Hey everyone, Ken Wink here to share the market commentary for August 2025. Before we get into today's topic, just want to talk about how open enrollment is right around the corner. So if you are self-employed or if you are retired or if you have an employer plan and you're not sure which option to take, just want to remind you that we have a very deep bench of insurance agents over at Summit Health Services. We'd be happy to give you advice on what options you should choose through your employer, and then also shop the entire market for you if you need health insurance yourself. Just a reminder, if you use a health insurance agent, it's the exact same price as whether you get help versus if you don't get help with this health insurance decision making. So why not get some help, right? All right. The main discussion for this month is the new tax legislation that was passed. Most people are calling it the One Big Beautiful Bill. Long story short, there's a lot of things that were in the 2017 Tax Cut and Jobs Act that were either extended or made permanent. So I can't overemphasize enough how this video, I didn't want this video to be an hour long, so wanted to try to keep it short. So we're touching basically some of the items that we think are most common and will impact the most people, but there are a lot of things that I'm not covering in this video. Zach is working on a blog post right now that covers exactly how this will impact parents, for instance. So go to our website, summitfc.net/blog, to continually see. We're going to update it every 1 to 2 weeks with more information about how this tax legislation will impact different groups of people. So number one thing that we want to tell you about is not necessarily the most important, but number one is that you can now deduct cash contributions to a charity, whether you itemize on your tax return or not. Now, most people do not itemize their taxes. So whether you itemize or not, from now on, a single person can contribute $1,000 towards charity and now write it off. And then a married couple can contribute $2,000 towards charity and write it off. So for some people, that could be a nice chunk of change that you get on your tax return now that you're able to do that. Number two, there's something called a Trump account that's available now for newborns. So if you have a child that was born in 2025, or if you're going to have a child born in the next few years, you have an opportunity to open up an account, and the federal government will put $1,000 into the account for you. It is an IRA. It cannot be touched until the child is 18 years old under any circumstances. Once these are available through Charles Schwab, we'll let you know. There is an opportunity for parents and grandparents to contribute up to $5,000 per year. We're looking at the legislation right now. It looks like if you put money into these accounts, you don't get to write it off on your taxes. If you can't write it off on your taxes and it's going into an IRA, that basically could be a double tax that eventually gets paid on it. So we don't like that too much. So in most cases, we're going to recommend get your $1,000 and then just don't put any more into it. Next thing is that your Social Security tax may be reduced if you're a retiree by up to $6,000 per person if you're age 65 or older. The income limit for this is $150,000 for couples. The research that we've done right now, 66% of people do not pay taxes on their Social Security. This should increase it to 88%. Number four, there are some corporate tax cuts that are made permanent. If a business buys a piece of equipment, you can write it off the very first year. Research and development costs are now also deductible in the year that they occur. If you were to build a new manufacturing facility, you can write off 100% of it in year one. Between now and January 1st of 2029. And then there are also some tax credits for semiconductor firms to build manufacturing facilities in the United States. So quite a few different business deductions there. If you are a high income earner and even some middle class families, it looks like that there's going to be some decent tax deductions available, certainly extending the Tax Cuts and Job Act that cut people's tax rates by quite a bit. So the estimate that we saw was that your average family, if you're in the top 20% of the United States in terms of income, each family will save about $13,000 per year on this. If you live in a state that has high property taxes, the deduction for property taxes used to be $10,000, and it's actually going to be $40,000 now. So people that have a very expensive vacation property or live in the East Coast or the West Coast probably had higher property taxes. As long as you make less than $500,000, you're now able to write off more of those. Probably the most talked about one is tips and overtime. So between now and 2028, the first $25,000 worth of tips and the first $12,500 of overtime will not have federal income tax anymore. Number 7, some low-income Americans are going to lose their Medicaid and their food stamps. They added a work requirement to it, which is going to, impact quite a few people. We're just hoping it's not a big paperwork nightmare. There are hospital groups that are estimating that this is going to cost hospitals over $1 trillion a year in revenue, because Medicaid is not necessarily going to be around to help all of these lower income people who still have health problems. Lastly, for today, number 9, tax credits for EVs, electric vehicles, are going to go away in September of 2025 instead of 2032. So there's an awful lot going on in the world right now. It's a great time to touch base with us and have a discussion about your specific situation. Just as a very quick stock market update, the stock market has performed very well since the bottom that occurred in April. If you look at our past market commentaries, we were pretty confident that this was going to turn out exactly the way that it turned out. The market does seem like it's overdue for a little drop. I wouldn't be surprised if we gave a little bit of the earnings back in August or September or maybe even October. But we are at this moment still cautiously optimistic that the stock market will be higher by the end of the year. So if you're someone who's thinking about taking money out of an investment account for an upcoming expense, we typically recommend taking it out now or waiting until December, because between now and December, the highest probability move is a little bit of a drop and then a rebound. Anything's possible. I would argue this is one of the most unpredictable times in history as these tariff negotiations continue to go on. So there's a lot going on right now. If you'd like to have a review meeting, please reach out to us. Give us a call at 586-226-2100, or you can visit our website, summitfc.net. Thanks so much on behalf of Bob Wink, Ken Wink, Jim Wink, Zach Backner, James Baldwin, Daniel Ladzitsky, and Jason Hamo. Thank you so much for watching. Please like and subscribe. Thanks.
Summit Financial, working with people you trust.